Hello and Happy New Year to you. Overall, prices have risen since coming back after the new year, so let's see what's been happening in some more detail. During Christmas and the new year, oil prices continue to rise, largely driven by the unrest in the Middle East, as well as a pipeline explosion in Libya which reduced output. Prices held their position at the start of the short week, with Brent closing just below $66.5 per barrel. Wednesday's session saw prices gain over $1 per barrel day on day. The API published its weekly report, which showed stocks had reduced week on week. Ongoing anti-government protests in Iran also contributed to the gains. More than 450 protesters have been arrested, and the death toll has now risen to 21. Whilst the increases on Thursday were not as noticeable as Wednesday's session, Brent rose 38 cents day on day to close at $67.89 per barrel. This is the highest level seen since May 2015. A long system and sufficient supplies between Christmas and New Year pressured prices lower. Prompt and near-term prices continue to ease in the new year as the Forties pipeline returned to full operation. February 18 lost 1.8 pence per therm session on session. Prompt prices continued to soften on Wednesday as the system remained long, although demand forecasts were revised upwards for the rest of the week, driven by lower forecasts of wind generation. The rest of the curve closed higher, directed by rising oil. Prices were mixed in Thursday's session. Day-ahead prices were pressured upwards as temperature forecasts were revised downwards to below the seasonal norm. Near-term contracts February to April 18 all lost value, pressured lower by the return of the Forties pipeline, whilst contracts beyond May 18 all posted gains in line with oil. Last night, most curve contracts closed higher than their close on the 22nd of December. Similar to oil and gas, prices lost value over the Christmas break. Prompt and near-term prices continue to ease, but longer-dated contracts found support on the first trade day back of the new year. Wednesday's session was largely bullish. Low wind generation pressured prompt prices higher, and rising oil and gas contracts directed the curve upwards. There was some relief for prompt prices once again on Thursday, which filtered into near-term contracts February and March 18. However, all contracts post-April 18 made daily gains of around £0.15 per megawatt hour. Compared to the 22nd of December, contracts post-April 18 gained between £0.2 and £0.5 per megawatt hour. You can download this report from our website. Thank you for watching, and we'll see you next week.